Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Thursday. Man, you know what? I've decided we need more short weeks. I love it, right? It's already Thursday in my mind. It's Wednesday, but obviously with the Memorial Day holiday, we're only here 4 days. So we only got one more show. The week's over. Another big rally here in gold and silver. And again, we kind of knew this. We've been saying all along, buy this dip on the debt ceiling, because as soon as it's passed, then everything goes back the other way again. It has passed the House. So it has passed the House. It's now going up to the Senate. I don't expect any problems because they didn't cut anything, right? I mean, you know, what's there to vote on, right? Hey, we lowered the spending just a little bit, and a big fat nothing burger for the Democrats. Of course, they control the Senate. Now, they do need 60 votes. So it isn't as simple as all the Democrats vote for it, all the Republicans say no. They will need, 9 Republicans, 8 or 9, whatever it is. I think it's 9. 9 Republicans I think they're going to need to get clearance on this. I think they'll get it. We'll find out later. I think they're going to vote on it tonight anyway, but 800-951-0592. That is our toll-free number. Voicemail. Holy cow. I don't know why it's so, we had a big issue with the phone number, the whole phone system in general that we got back up and running. I don't know why it took a week, but we finally, it wasn't till today that we finally are getting our voicemail set up, so we'll have our voicemail back. I apologize. The phone just rang and rang and rang. I think this morning at about 5:30, it finally got to, you cannot leave a message at this number, and that was our clue that, okay, now we can reset it back up. So anyway, that's back up. allamericangold.com is the website. We had a bunch of economic data out. We had manufacturing data out. We had jobless claims data out. We had private sector job creation. We had news out of, Macy's today. Kind of just like we thought. Macy's was like, man, everything was great. And then March came, and then April came, and then May came, and now everything's terrible. But Jason, there was something, again, just like we have seen for the last, 60 to 90 days, a very mixed bag. Depends on what side of the fence are you on as to whether is the economy good, is the economy slowing, is the economy bad. We had something for everybody today.
Yeah, and I think as far as which direction they go, it's, if there's a market meltdown, they'll stop raising the rates and they might lower them. But as long as there's not that kind of urgency, it's a good chance they're going to raise the rates and keep on trucking, right, Joe? So, and because like we've said many times, raising the rates, pausing the rates, lowering the rates, there's not really a good place to go. Don't print the money, have contract the money, or start printing and have quantitative easing. There's not really a place to go for their safety to make things work. So. It's a wait and see, but yeah, you've been saying it. You've been. I've always been. I think they could raise the rates, but I don't know. They can also lower the rates. They have the keys to the car, but it looks like another rate hike is in order currently.
Yeah, and again, we will look at all of these data points. Let's start with private sector jobs. This is what they call the ADP. And then I think tomorrow we're supposed to, and I don't know how the holiday affected all of this. Tomorrow, it's either tomorrow, if not tomorrow, it'll be next Friday, we'll get the government jobs number. But ADP, much hotter than expected, 268,000 private sector jobs. That was 100,000 jobs more than expected. So that's bad, right? That's a bad number. Let me clarify. That's bad if you want the Fed to stop raising rates, right? Okay, that's too much. Now, full disclosure, ADP, they're kind of wonky. They're always all over the board. It doesn't doesn't necessarily correlate to the government number, and they tend to care more about that than they do the ADP number. But having said that, so the headline number, that's not great if you don't want rate hikes. But there was some good news in there, which was according to ADP, wages, right, which has been a big problem with inflation. Wage growth slowed in ADP. Now, they had some other things in, like manufacturing jobs down 48,000, IT jobs down 15,000, financial activities down 25,000. These are the good paying jobs. Where was all the job growth? Leisure and hospitality, 208,000, and then construction, 64,000. Those were kind of the pluses in the minuses. But the thing that they liked the most out of this report is pay growth. Not only did it slow, but it slowed pretty substantially, down a whole percentage point. Now, that's not good for workers, right? especially with inflation staying high. But, yes, there was a slowdown in the wages of that number. So, Jason, that one number, we got both sides of the spectrum, right? We had, oh, my gosh, that's too many jobs. But then you looked and you're like, they're kind of all crappy jobs, right? You know, and you kind of think about, well, this was a May number. All the resorts and all the, people are going on vacation for summertime. Maybe some college kids getting some jobs out there. But the number that they like, wage growth slowed significantly. I don't know if that's going to be enough. We'll go through all the other data when we get back. Eight 800-951-0592, Joe and Jason, Patriot Radio News Hour, live on this Thursday. A quick look here at the markets. The Dow's up 38. The S&P's up 23. The NASDAQ up 96 points. Gold's up 16, 1980 here as gold continues to march higher. Silver, another good day here for silver. Silver up 38 cents right now, 23.97. By the way, Buffalo Rounds, this is it, the last day of the sale on Buffalo Rounds. Rolls of $20, $580. If you buy 25 rolls or more, $570. Today is the final day on that. But as you, again, start to understand the need for diversification in these portfolios, there is a very good probability rates aren't done here. Everyone wants them to be. Banking problems, believe me when I tell you, it's going to be a much uglier second half of the year. And even though, the stock market hasn't done anything, the one thing it hasn't done is collapse. But that's really AI stocks. If you take out the AI stocks, of course, you know the ones, Google, right? Microsoft, Apple, right? Those guys in the AI, NVIDIA, if I'm saying that right, they're now worth over $1 trillion. But when you look internally in the stock market, today's a great example. 250 stocks at new all-time 50 lows, and only 50 stocks at 52-week highs. Yesterday, it was like 400 new 52-week lows and 50 new 52-week highs. The internals aren't as good as they would appear to be, but this is why you got to find other places to get that money out of these banks. And another one, a great place to do it is that Y-Refi. You got to have at least $50,000. You know that. Here's the good news, though. You can use existing IRAs. Up to 10.25% returns. You heard me right. Up to 10.25%. If you just want to go, hey, I just want a year off. I want to take a time out for a year. They'll still give you 6.25%. That kills any money market or anything else you can think of out there. Check them out. Invest. YREFI.com. That's the word invest, the letter Y, REFY.com, or call them at Why refi 24? And Jason, as we look here, so we had ADP. The headline number, terrible if you're looking for no rate hikes. But then you saw, well, what kind of jobs were there? Okay, a bunch of crappy jobs. And crappy is probably the right, a job's a job, right? You'll take what you can get. But the sectors that led to the job growth are not the good-paying jobs, and all the good-paying jobs were laying off. Probably why you saw the wage number fall so much is because they weren't hiring the good-paying jobs weren't hiring, so that stood to reason. Then we got jobless claims. Now, finally, in this report, we didn't get anything crazy from Massachusetts. So apparently for the last month, they have screwed up this number. It came in at 232,000 jobs lost. First time people filing for unemployment, 232,000. Now remember, like 4 weeks ago, we got to like 260, right? Yep. And then Massachusetts was coming, oh, wait, we got fraud and all this stuff. 230, that's low. That's another number that you're like, that's probably not conducive for saying let's not raise rates, right? That's still, they probably like to see that number higher. I guess the good part was it wasn't 220, right, or 200. 232, and then continuing claims. Now, this was another one. 4 weeks ago, we're like, oh, my gosh, we're going to break 2 million. That's not good. But then Massachusetts, we got this 1.8 million. And really, that's rounding up. It was 1.796 or something like that. So that number is like, and again, probably, I would say neutral at best as to saying, you know what, based on that, we're probably still raising rates. And then last but not least, Jason, we got the manufacturing data. Now that stunk. That was terrible across the board. But the one thing for those that were hoping for a rate pause, unlike yesterday's number in the Chicago PMI, the overall PMI for the country, prices came down in that report, Jason. So there's some good news for the pausers out there.
And he said wages were down. Is that what you said early in the
wages were down, and according to the country PMI, prices were down and wages were down.
So I think you're seeing a lot of businesses doing a little labor reshuffling is what's going on, because we have the inflation. Costs are higher for everybody, every business, every government. They're all having to pay more, which is why I think they couldn't. The whole debt ceiling thing, I think, is a problem for them, because they how can you cut when everything costs more? And so what do you do as a business? There's certain expenses. There's materials. There's labor, right? And there's a few. There's these line items. How do you make labor work? But you got to have people working. So, well, if we let these higher wage employees go and we have lower wage employees replace them, then that will cut cost. And I'm wondering, Joe, if there's a lot of that going on. I'm wondering how much labor reshuffling we got going on. That also makes the job numbers kind of weird, right? Lots of people being fired, but then a lot of people being hired, and you're just not getting those gigantic numbers, which would show a recession. And hey, we need to stop raising rates. So once again, it's happening slowly. It's happening, but it's happening slowly.
Yeah, and again, right, it's one of those things where you look at all that and you're like, I don't know. I don't know what they're going to do, right? I mean, there's enough on both sides. How about mortgages? Rates shot back up, back over 7%. And here's how rate sensitive mortgages are. In a week, we went all the way back down to 1995 levels. So we've taken we've almost gone back in time 3 decades in applications to purchase a home, down to 1995 levels. Again, housing, we know that there's not a lot going on, but you know what? There's not a lot out there. Right, so it's created this weird market where, quite honestly, I would say that the market, and I guess it depends, right? Arizona, Colorado, probably different than, say, San Francisco, right? Probably different than Chicago. But the places where, things are still reasonably okay. Not a lot of inventory, not a lot of sales, but prices are hanging in there. Right? Prices are more than hanging in there. Case Shiller said, hey, there was a year-over-year drop, but that may go away. So even that is confusing. You're like, well, wait a minute. Purchasing home applications to 1995 levels, that probably says you should cut rates. But then Case Shiller comes out and says, listen, we think home prices are going to start rising again. That means we got to raise rates even further. I mean, could we be looking at housing going back to like the 80s in applications? I mean, that is something that is not out of the possibility, especially if they're going to raise rates again, Jason.
That's exactly true. And once again, as you're talking about mortgages, who's gonna buy a house if your job suddenly change? I mean, one of those things that you need to get a mortgage, you have to have job stability, right? So, who's going to be able to buy a house in this situation under normal circumstances? Of course, there's a lot of people out there, millions and millions of people out there that have equity in their home, and they can move to the next place and get a mortgage based off the less than 80% that they owe on the next house, of course. But obviously, if mortgage applications are down, that means people aren't even trying. Mortgages is one thing. Mortgage applications is just an attempt, and the attempts are down, Joe.
Yeah, the attempts are down big, and really for the people that do, you're right. There's a lot of people got equity, but they're like, I ain't moving. I'm locked in at 4%. You know what? Moving, because most people, why do they move? Hey, I'm going to move up, right? I'm going to move into a bigger house or a better house, or I'm going to move to a better neighborhood, right? That's the vast majority of those people. And what they find out is, holy crap, yeah, I can put money down, right? I can get good money for my house. But look at my payment. My payment's going to double. Yeah, I'm not doing that, right? Forget it. I'm not doing that. And you're right. When you go back, now we already knew home sales started to slow this time last year, remember, because rates started to go up. If you actually go back to 2021 and even 2019, go to 2019, applications are down over 40%, 41% from 2021, 40% from 2019. Jason, that's an amazing when you think about it. Wait, we've had a 40% decrease in applications. Normally we'd say, oh my gosh, prices got to be like half of what they were. That isn't the case. And this is the box, right? We keep talking about the box, don't we? There is no good answer for any of this. It doesn't matter what they do. Stop raising rates, keep raising rates. Both of them are wrong.
Well, and Joe, you kind of stated it. If the markets were somewhat in a normal situation and the mortgage applications were way down, then the prices should drop, right? There should be availability. It's just supply and demand. However, once again, we have inflation. Just to build the starter home is much more expensive. So the builders and the people owning the homes, they can't sell for less. You've talked a lot in 2021, 2022 about demand destruction, and that's going to keep on happening too at a slow pace. I think we're grinding more to demand destruction. So this is, I think, a good example of, look, people would buy the cheaper houses because mortgage applications are down and people can't refinance. It's expensive, but they just can't get a cheaper house. Everyone's going to hold on to the house they got because I can't sell it for $350,000. I got to get $450 for this house. I'm just going to sit on it, right, Joe? Yep. Oh, because somewhere in the future it's going to fix it. And we don't know if the housing prices or any of this stuff's going to get fixed. This could be long term, so people are waiting, Joe.
I mean, look at some of these numbers. Atlanta, these are just applications to purchase, down 66%. Charlotte, down 66%. Phoenix, down 64%. And I'm going to tell you right now, the Phoenix housing market, prices aren't down here. And yet applications are down 64%. Nashville, 60%. Vegas, 60%. Jacksonville, 57%. Philly, 57%. Tampa, 55%. Orlando, 55%. It's amazing how this is. And I think this is part of this overall problem in the entire economy, which is, hey, we have all these signals that say things should be going down, and it hasn't happened. There's only one way, and I've said it over and over and over again. There's only one way. Millions, and I'm not talking about one or two. 10, 20, 30 million people need to lose their jobs. Otherwise, Jason, this problem doesn't go away. It's just that simple.
I agree. And the job market's also a lot different than it was during the 2008 crash. You know, just there's the level of high-paying quality jobs are just less. Right, Joe? So it's a weird job market. There's a need to fill spots, but you know, when are we really going to see big companies, you know, really have a lot of stores shut down and really have huge job losses? Then we'll see it, Joe. It's coming.